markets are somnolent. The most prominent example is the VIX, which on Monday ended at its lowest level since December 1993, with only 3 instances on record of a lower closing price. Related to the violence of movement in the S&P 500 index, the so-called fear gauge suggests market tension, well, it's roughly equivalent to the anxiety a waiter may forget to bring slimline tonic alongside the gin. The US stock market is also becalmed, budging less than 0.2% up or down from day to day only twice in the last 2 weeks. Elsewhere, the story is similar, if with less pronounced absence of drama. A European equivalent of the VIX, the V stocks, well, that dropped towards 14 on Tuesday, having averaged 20 so far this year. Should the signs of calm be internalised as message of reassurance, though? The 9 previous occasions when the VIX closed below 10 are scattered in 2 periods. In late 1993 and early 94, they preceded a famous shock to the bond market, when the Federal Reserve raised interest rates much further and faster than expected. Stocks suffered a correction a few months later, but that was soon forgotten as a tech bubble inflated. Late 2006 and early 2007, by comparison, well, that was a moment of calm 6 months before a great peak, ultimately to be followed a year later by crisis. So the recent drop in the VIX, well, that might be attributed to the popularity of trading in the instrument, with many investors choosing to sell volatility, suppressing the price. However, it seems more likely the reverse is happening, that demand for options as a form of insurance against instability is on the wane. Investors the world over have been reassured that central banks will not allow a return to recession, so there is little need for protection against market dislocations, sure to prove temporary. Another sign of this confidence can be seen in the way different assets no longer move in lockstep. For much of the past 9 years, financial markets could be separated into good days, when risk was said to be on, and bad days when it was off. Today, the so-called correlation of global asset prices has fallen back to where it was pre-2007, according to PineBridge Investments. That's a sign of a healthy market interacting. So, for those who were driven to drink by the financial crisis, it may be hard to relax. But the message from the markets really is that everything is fine.